Hello everyone and welcome back to another episode of Stock Savvy, a series where we investigate individual stock on the JSE and we look at everything, the companies, bullish cases, bearish cases, key value drivers, and of course the most important, its valuation. Is it a buy, hold or sell? And every week we are joined by an expert guest, and this week we have our first returnee on the show. Welcome back, Charl Botha.
Thanks, Phil.
Ever since Charl covered Pan way back about 3 months ago, the stock is up almost 30%. So Charl, not saying you're a market mover, but not saying you aren't either.
Yes, Paul. A bit of luck, I would say. So too short, but I'm happy.
Yeah. Well, we're making money. So today is your second go at this, and we're investigating Caxton. Caxton is printing, publishing, and packaging. Wow, try saying that 5 times fast. Printing, packaging, and publishing. And so if you forget everything that Charl said, at least you remember that, guys. So the 3 Ps of Caxton. So Charl, over to you. You know the drill. Caxton 101. Go for it.
Yes, Paul. Thanks for having me, and welcome to the viewers and listeners. So Caxton, what's always interesting to me is to see where a name comes from. So why is this company called Caxton? And interestingly, William Caxton was the first. He brought the printing press to the UK into England in 1476. So printing press was designed or developed or someone in 1423, I think. Yeah, so 50 years later, that's Caxton. So I suspect the company is named after him, but I can't be sure. Yeah, so in short, it's a South African listed company. It's on the JSE. It's about 3.5 billion rand. If you wrote a check for that, you would own the whole company. And what you would own is a company that's got about 120 newspapers, local newspapers. It's the largest owner of local and regional newspapers in the country. You'd also own a packaging business that's got a couple of manufacturing facilities in the Western Cape and in Gauteng. You'd also own a bit of a printing operation that does newspapers and does books, and also Flipfile. I don't know if you remember from school, Flipfile. So they also
Of
own
course.
that. Yeah, so let's just turn to the newspapers quickly, the newspaper side. So yeah, as I mentioned, 120 newspapers. So that would be something like, let's say, Hermanus or the Oeverberger, the local newspaper. Not that they own that, but that would be an example. And the biggest newspaper that they own is The Citizen in Joburg. And what's interesting about the newspaper operation, they're the publishers, so they actually have the journalists and people writing, but they also print their own newspaper. So there's a publishing part and there's the printing part. So it's a one-stop operation. Now, what makes it a cool business? You must remember, people that don't have as much money to have a cell phone. It's not like us, maybe to have a smartphone with lots of data on, and you can just go on the internet and compare prices. The regular median person and maybe lower LSM income, they don't have these smartphones, or they don't. If they have a smartphone, they don't have enough data to go and look at all these things. So local newspaper, where they get the newspaper for free, it's a wonderful place for advertisers to reach these people. And actually, Caxton's newspapers reach 3 million households weekly. Yeah.
Wow.
So it's a wonderful advertising business. And what Caxton does is that obviously sell advertising space in the newspaper, but then also have these little inserts, when you open the newspaper, and they tend to fall out and so on. So they sell that to mostly large retailers, love it. So your ShopRite specials or Pick n Pay specials, and also local businesses, let's say your car mechanics or funeral homes, or, do a little thing there. Now, that's on the publishing side. They also do the textbooks for schools and things like that. That's small, and the Flipfile, as I mentioned. Then on the printing, so publishing and printing. So the printing would be, they print their own newspapers, as I mentioned, but they also print textbooks, they also print magazines, and they do it for other people. So other people might publish the titles, but they would print it. And they'd also print the inserts for the big guys, wherever those inserts might go. The Burger, which they don't own, the Port or whatever. Okay, so that's the publishing and printing part. So the packaging part And there they have businesses that big label printing, so for the beer industry, they have that. They also have, they recently bought a papzak business. Those who, you know what I'm talking about. So,
I know
yes,
exactly.
So they would,
I used to know.
yes, same, yeah. Still know, the budget still know. But so they do that, and they also do the packaging for cigarettes, increasingly into Africa. They also do a big new growth market for them is the packaging they do for takeaway businesses. So, for instance, KFC changing from plastic and things like that to carton boxes, and they do that. And
Wow.
also changing, beer packaging used to be the plastic covering. Now you will see it's like a carton based thing. So that's their packaging business. And just one last thing I'll mention is Caxton started off as the printing and publishing business for a long time, and sort of packaging is, in the last 10, 15 years, become an addition to the company. It's a growth area. So that's Caxton 101 and 102 probably.
Wow, that's super interesting. I'm curious that you said that so packaging is a kind of a new avenue for them, and it's been increasing in weight. What is the current weight of the two divisions of Caxton? And I assume that packaging is the one that's going to kind of lead the way from now on.
Yeah, you're correct. So I can't give you exact figures, sort of what's happened off the top of my head the last 10 years, but at the moment it's about 50-50, both revenue split and profit split, about there. But packaging is definitely, if you look at the company's intentions, definitely a place where they want to grow. And if you were to sort of summarize their strategies, they're going to use the publishing and printing thing, the newspapers and the stationery and the printing of that, as a cash cow. So they're not going to invest too much to grow this business. They're going to use this business and the cash that comes from it to either invest organically in the packaging business, so spend more on machines, or buy other packaging business, as they recently did with in any box vein thing, the bladder, that thing. Sorry, I couldn't get the name.
Okay.
And then also make investments into maybe share investments into other packaging businesses that are listed. For instance, they own about 34%
I see.
of Mpact.
Because packaging is obviously a massive industry.
Yes,
so
exactly. So
that's where we can really make some money.
exactly. I think it's about the third or fourth largest industry in the world. And if you think about it, in our lives, everything comes in packaging. So especially with e-commerce and deliveries and everything. So every single thing almost comes in a package. I mean, even a new car comes in that ribbon that you buy it and they make the big ribbon. And so yeah, packaging is big, and increasingly it's seen as a place where people really want to see environmentally friendly solutions. So you add lots of plastic, but people are really keen on moving into carton wood-based products, which are more environmentally friendly, and that's the perfect place for Caxton.
Yeah, agreed. I think the green global footprint is a massive narrative at the moment, and will continue to be, especially for the younger generations. I'm sure I have an interesting question for you before we get to the value drivers. I know that's how you love to actually look at a company. Is printing and publishing, especially publishing, publishing for well-known brands, the last couple of years, it felt like that with the decentralization of information using tools like Twitter and random newsletter subscriptions that I've been receiving with pretty good information. Now it feels like there's a lot of fake news out there, especially with AI, the deep fakes. So I've heard that people are now reverting back to your traditional source of information. So that's actually kind of a bullish factor again, because now they want validation of information that they receive. Would you agree with that?
I haven't heard that exact, that people are going back, but it would make sense to me. So in a world where you don't know who to trust anymore, maybe your local newspaper and the journalist that he lives 3 doors down, and you can go ask him. So maybe in that sense, and I think people want to know what's happening in the community. So Caxton actually did a survey a while back, to see how it's going, how people are engaging with their news, and it's quite positive. People are still very much interested in their local news, buying their local papers, and I think we are so used to sort of the digital world seemingly taking over our lives that we forget a lot of people still like going to get their paper. And remember, the paper is free, right? So you can just pick up the paper and there's the story about whatever happened in your community that's interesting that might not be featured on Twitter.
All right, so let's get to the good stuff. So I know from your PAN from the PAN interview that you kind of look at a company by identifying a few main value drivers. So what are the main variables to take into account when you estimate where the share price will go? Of course, a gold miner and a printing, publishing, and packaging company are not the same. So what are the main value drivers for Caxton?
Very good question. And as you say, this is the meat of the argument, and this is what I do. If you were to look at my day job, about half of it is spent thinking about these things. So it's reading, and then take the reading and I think about this. And yes, publishing and printing and packaging company is a lot different than a gold company, but the value of any company is the same. It's let's say the fundamentals of the value is the same. What I mean by that is the value of a company is just the cash flows it's expected to generate in its future, and those cash flows brought to the present and with a formula, and that's the value. Okay, but you're right, the factors that go into determining what the free cash flow is or the cash flow is going to be is a lot different. So what I do is I look at there's two statements I look at. So I look at the income statement and the balance sheet, but obviously it's big. If you go open an income statement, there's a lot of things happening there and there's a lot of things happening on the balance sheet. But essentially on the income statement, I just want to see the most important thing there is the top line. It's the revenue. It's the number one thing on top. And if that thing grows, that's good. If that thing stays the same, it's okay. And if that thing decreases, it's not good, all else equal. Because if you don't sell stuff, doesn't matter how good your cost control is, you're not going to make money. So it's top line, and then people need to spend money to keep the business going, and whatever is left is then the profits. And then on the balance sheet, I just want to see how well do the people use the assets to generate that profit that I'm talking about. So let's just say that quickly again. You want to sell stuff as much as possible, grow it. You want to do it as cheaply as possible, so sales minus your costs, to get to as big a profit as what you can. And you want to generate that profit using as few assets as possible. So the reason why I say as few assets as possible is because, let's say I've got a business, one business uses R1 million to, make bread or something. Another business uses the same million, but the first business only makes 100,000 using the R1 million, and the second business makes 200,000 using the R1 million. So the second business is a lot better. They use the assets better.
I see. So if that thing goes up, it's good. If that thing goes down, it's bad. Charl worked out May 2023. I love it. So let's before we really dive into it, let's just put a name on it. So you've explained it now. So give me the exact name that you're looking for.
Sure. Okay. So the top line would be the revenue or sales. Okay. So
the revenue or sales.
Yes, I want to look at that, and then the next most important line is what I call the gross profit margin. So remember I said revenue minus costs, but there's two sets of costs. The first set of costs is the raw materials to actually make the stuff. So for instance, in Caxton's case, that'll be the newspaper, paper, the ink, petrol or whatever, electricity or whatever. Then, so the top line, the top thing minus the raw material costs will take you to gross profit. And gross profit minus your operating costs, then my electricity comes on. Then your operating costs and then your profit. So, So top line, gross profit, operating profit. So those are the three things I look at. But what I do is I say, what's the gross profit margin? What's the operating profit margin? What's the revenue growth rate? So those three things. on the income
I
statement.
see. And of course, the return on invested
Return
capital.
on invested
Which you
capital
said, how efficiently
that's
are
the
they
balance
actually
sheet
using
one,
it?
and the balance sheet one would be the operating profit from the income statement. That number divided by the amount of assets the company needs to use to generate that operating profit. So those are the things I look at.
I see. Okay, awesome. So now we know the theory.
Yeah.
So let's put Caxton on top of that
Yes.
theory. Let's apply
Yes.
it. So the floor is yours. Tell us the main value drivers
Yeah.
for Caxton specifically.
So just very quickly, I love what you said there, because this is the framework. So through all, if you study these things or you teach yourself, that's the framework. And everybody spending a little bit of time can learn this framework. The art of investing, we become better over time, is you become better at putting things into the framework, or saying, what's irrelevant and, what's relevant, and you start to get a judgment. You start becoming better at that. So yes, what goes into revenue? So let's just quickly see what the business is again. Remember, it's printing, publishing, and then packaging. So for both these businesses, it'll obviously be sales prices. So the revenue, the top line is made out of the price that people sell it at and the quantity of stuff they sell, right? Okay, so let's take prices. In each of these businesses, so printing, publishing, and packaging, Caxton doesn't have significant control over the price. It's not like an Apple, iPad, where Apple decides, or Apple iPhone, where Apple decides, the other people are charging 10,000, we'll charge 30,000. It doesn't work like that. It's a commodity industry. So people who buy news, who want their newspapers printed, or who want to buy packaging, they're not going for the Caxton brand. They want good product, and they'll get it where they can get it at the best price and good delivery and things like that. So Caxton doesn't have a lot of control over the price, and they don't have a lot of control over the quantity. Why not? Because packaging, the demand and supply for it is based on the economy. So as the economy does better, people have more money, people buy more stuff, they need more packaging. So it's an economy thing. But what Caxton can do is they can increase. So there's sort of a fixed pie of in the market, publishing, printing, packaging market. There's a size, and maybe this market grows a little bit one year, maybe it declines a little bit as South Africa economy grows and declines and so on, or low growth rate or whatever. What Caxton can do, and what they have done, and remember I said their strategy is to use the publishing and printing business as this cash cow, and to grow the packaging business. So what these guys are doing, they're not in the printing and publishing business, they're not growing a lot. So the P and the Q that make up the top line is going nowhere, or a little bit backwards. But where they can increase the quantities is on the packaging side by buying other businesses. So otherwise you can't control the price a lot, but you can buy another company that adds Q or quantity to your products. And in that way you can increase your business. And that's what they've been doing. Because remember, the packaging business in Africa has got hundreds of players. Literally, if you go, drive to work, just read some of the signs next to the road, or read some of the signs on the cars or trucks, and you'll see, packaging business, whatever. There's many businesses like this.
So they're basically buying market share. Is that what you're saying? That's how they increase their Q.
Yes.
All right.
And I like that, because the reason why I like that is because they have a proven track record. If you look at the history of operating these businesses very well. I mean, they are since in the 50s or 60s. I can't remember exactly. They've been doing this for decades, and they're their cost control is very good. If you've read through their annual reports and things like that, they're really on it. So, and especially when the economy is bad, this is why I like it at the moment. The economy is bad, everybody's struggling. Maybe there's a packaging business, it's struggling a little bit. Maybe they've got a little bit too much debt. Caxton comes in, buys the company, takes their processes, they're learning throughout the decades, and improves this business bit. Caxton has got so much money, they don't have any debt. We'll get to that just now. And they can do this. And do it over time, and you'll see the packaging business just growing in terms of buying market share. And that's what they've been doing. Okay, so here we are. We've got the top line. We've got the gross profit things. Now the operating profit or the operating expenses, that would be your salaries, that would be your electricity, that would be all the things that do not directly go into the product, but are required to keep the business going. And here Caxton is very, very good. And that is what I mean. They can buy other businesses and just, make these businesses better. And by doing that, as they get bigger, remember that there's certain fixed costs in a business. And as you get bigger and you put more quantity through the same business with the same fixed costs, it means your costs become lower. And as your costs become lower, you make more profits. And what you can decide then is you can decide to decrease your prices slightly on the top line. And as you decrease your prices, you gain more market share and things like that. It's a virtuous cycle as far as you can do that.
Awesome. Okay. So basically they're very, very efficient at what they're doing. All right. I like that. So they're buying market share, especially that's good in a recession. They also have very efficient operations, so they just kind of add it to everything they already have and apply that. The last one is return on invested capital.
Yes, so these businesses, in return on invested capital is very dependent on which industry you're in. So if you, for instance, chemicals companies are horrible, mining companies are horrible, software companies are brilliant. So these medical... Pfizer, those type of companies are also good. So the business, printing, packaging, publishing is not great. It's a commodity business. It's better than automobiles and airlines and things like that. And what I like about Caxton is they are doing double-digit returns on capital in an industry where you wouldn't expect that. So it shows that they're using the assets very well, even though it's not a Microsoft or something like that. For the industry, they're very good at generating sales with each rand of assets that they use.
I see. All right. So, yeah, super interesting, Charl. I'm really on board at the moment. So, of course, the next section is bullish and bearish cases. So, I also own Caxton, so I know a little bit about the company, due to you, obviously. So I know bullish cases include like very little to no debt, massive cash position, all of that. But you can dive into that. So a quick summary: bullish cases and bearish cases.
Yeah. So the bullish case, I've touched on a lot of things, but one of the bullish, the most bullish thing is the price, the valuation. So you're paying
the valuation. All right.
Yes. So you're paying the price of the share. So you're paying about, I think, R9.50. The price has actually come off a little bit in the last week. So you're paying R9.50, about 3.5 billion for the whole company. So what do you get if you buy the whole company? First off, you'll get about, I think, 1.4 billion rands worth of Mpact shares and a little bit of other things. Remember, they own about 34% of Mpact. Now, what is Mpact? Mpact is the largest packaging company in South Africa. It's actually the old Mondi, Mondi South Africa. So you'd have seen Mondi is listed overseas as well, or listed here but does business overseas. But Mondi South Africa is called Mpact, and it unbundled from Mondi in, I think, 2011. So Mondi South Africa, Mpact, Caxton owns about 34% of it, and that stake is worth about 1.3 billion and a little bit something. So that's 1.3 billion, remember that? And then there's another 1.1 billion of cash and cash equivalents. So what's that? 2.4 billion. So you're paying 3.4 billion, you've got this value here, so that leaves $1 billion, and for $1 billion, you're getting about, let me see here quickly, I've got a little model here, I think it's 400, yeah, it's about 300 million rand profit after tax you're getting for $1 billion.
A year.
I think sustainable, more or less sustainable. So that's just incredible. I mean, that's a little bit more than a 3p. Yeah. So, yeah, I think that's brilliant. I think it's worth So that's the bullish case. I think just based on that, it's worth far north of 13. So I mean, it's 950 now.
Okay.
Yeah.
Wait. Let's do this for the YouTube shorts.
Yes.
Okay, so what is it now, and where do you predict it's
Okay,
going
so
to
it's
be?
950.
Let's make a prediction. Let's play with it.
So it's 950 now. And I would say
950.
let's make an 18-month prediction. So I think this company would be at least 1350 and as high as 80, I think. So we can sell.
I see. So what I like is that they can also absorb a lot. I mean, they have a massive cash position, so it's not like they're high into debt.
Yes.
And if we continue in this recessionary period we are in at the moment, they're gonna maybe struggle or even not make it. So they have a quite a nice buffer. And what's actually playing in their favor, like you said, is that it being a recession now, they can acquire these other companies quite cheaply. That's what I like. Okay, Charl, so the bearish case, I know there's a lot of Mpact difficulties.
Yes.
Maybe tell us a little bit about that.
Yes, just one point you mentioned there, which is very important. Remember, they've got 1.1 billion rand in cash, right? So if interest rates go up, they actually benefit because they're making more interest income. So that's, for each, if you've got £1 billion in cash, and for every percentage point interest rates go up, that's another 10 million rand profits. So yeah, that's excellent. So one must remember that. Secondly, the bearish case. So I think you're completely right. In my opinion, there's two, I would say yes. Mpact is by far the biggest reason why I think the share price is not already 13, 14, 15 rand. And why do I say that? They made an excellent acquisition of Mpact shares a few years back. I think they bought Mpact shares for like 15 rand. I think Mpact is 26, 27, if I'm not mistaken. So they made a lot of money. They invested 700, 800 million, and it's worth 1.4 billion. So it's a very good investment. Now they've indicated that they want the whole company. So they've got 34 point something percent, they want 100%. Now the thing is, the moment you cross 35%, you need to make an offer to all the shareholders. So the rest of the 65% that you don't own. Now the thing I don't like is Mpact has already gone up quite significantly. So the one thing I'm worried about is that for them, for the 65% people to sell, they probably need to agree to sell. They probably need, way more than 27 rand to make them agreeable to sell. So that's the first thing. And I think Impact's also a bigger company. So it's always a risk when you acquire something that's as big as you or bigger than you. There's always acquisition risk. If you look at the history of mergers and acquisitions, the odds are not good for creating value. And what I worry is, if you've been following the news, there's been a spat between Caxton management and Mpact management regarding all sorts of complicated, intricate things, competition commission, competition tribunal. There's so many legal things happening there. Let's just say that Impact's management and Caxton management won't be exchanging Christmas cards anytime soon. But here's my other thing is, because Caxton has indicated so forcefully or so continually that they want to buy Mpact. The danger to me is that these guys, it could become an issue of ego. So we said we're going to do this. Maybe they should stand back, in my opinion. Maybe they should stand back a little bit. Maybe they are doing that now, I don't know. But stand back a bit and think, you know what, the economy is not going great. Maybe Impact's share price will come down once again, to under 20 rand. Then we can offer 23 and the 65% guys will agree, so we buy it cheaper. So what's the rush? That's the one part. Or the other thing is they could sell or unbundle their 34%. What does that mean? It means they give us, as the shareholders of Caxton, let's say I've got 10 shares of Caxton, they unbundle the Mpact part, maybe I'll get them 4 shares of Mpact. And then I can decide, as a shareholder of Caxton, let me sell my impacts and things like that. I think a
I
much
see.
better strategy for them, just from sitting on the sidelines, remember, I'm not in the business, is to do what they've done recently. Just buy small companies. Just, you're a 3.4 billion rand company. Like I said earlier, maybe there's a family wants to immigrate or whatever, buy this 200 million rand company, that 100 million company, and put the small ones into this bigger mothership. And
I
so my
see.
biggest worry is they're going to overpay for this other business. And if they overpay, they're going to be destroying value.
Very interesting. Okay, Charl, so maybe let's end off with the following. So I have a question for you. Of course, just full disclosure, everyone. Both Charl and I are shareholders of Caxton. We've been following this stock for quite some time. Charl, the last 5 years, it's not done anything. Obviously, there has been some bumps and some dumps along the way, but on a 5-year time frame, you haven't really made any money except for the dividends, of course, which is quite juicy. Why now? What do you think will change in the next year or two? Why will the share price go from 950 to, what did you say, 14 or 16 rand?
Well, toughest for last, but that's good.
Have to put you on the spot a little bit.
No, for sure. This is my biggest holding in my account, so it means
Wow.
I really I've got a lot of writing on this. But so one thing is the investors in general. So just a tip, we all look at the share price graph. So many of us do that, all of us. And if you look at the share price graph for Caxton, as you pointed out, it's gone nowhere essentially for 10 years. But you have made dividends. So in other words, you've made about 4, 5, 6% in dividends. So not great, right? But it's still something. So it's not like you made nothing, you made that amount of money. So it would have been like putting your money in the bank. Another thing is your returns have a lot to do with your starting and ending dates for when you choose to look at the performance. For instance, if you bought this company in COVID, and that's like 4 rand something, the share price was 4 rand something, went up to about, I think, 11, and it's down to 950. But on the other hand, you could have bought it somewhere, I think in 2015 it was 18 and then dropped 4 rand. So it's up and down. So you must just remember there's very few SA companies that in 10 years, on a 10-year period, made a great deal of money. We've got a lot of cyclical companies in South Africa, which means our market's not growing a lot, our economic pie. So many of our companies have to steal market share from other companies to grow or to do their things. So very important.
I see.
But here's the thing. Here's why I think, the reason why I think Caxton will do better in the future is Caxton is changing. So for the last 10 years, you've had a business that was mostly, or, it came from a publishing and printing place, and it's going into, as I said, packaging. But it's been very solid. The top line hasn't grown really, but they've been very solid in making profits. So if you look at that, you'll see it's almost like a bond. Now you bought your bond, your government bond for X, gives you a dividend every year, but it's boring. There's nothing happening. But what's happening now is as they're moving into packaging, which is actually a growing place and where they've shown they can make money if you look at what they've been doing. Now it's becoming a bond with a call option. So what do I mean? It's this boring thing, but now there's a little bit of excitement because they've done really well with the Mondi acquisition or the Mpact acquisition. They're doing these little bolt-ons that can really move the needle. And the reason why I don't think it hasn't yet come through is because the company is very, very small. So it's not on the radar of institutions. It's just too small. So as it reaches a certain size, maybe 5 billion, 6 billion, 7 billion, then you'll see more professional money coming in and maybe lifting, a lot like Afrimat. Afrimat didn't, was small and nobody was interested for a long time, and then it reached a certain size and the company did well and it took off. And also, one last thing, is this is not a Purple or Renogen with an exciting story. I mean, this is as boring as, dirt in the Karoo. I mean, I don't think even managers talk about what they, at the Braai, about what they do, these managers. It's not exciting. But I love it. It's not exciting. it means you can get bargains, because a rand made from selling a newspaper ink, printing a newspaper is the same as a rand made from artificial intelligence, in my opinion.
Yeah, so I also love the boring. Of course, Charl and I are very good friends, everyone, in real life. So a lot of my investment philosophy I actually learned from Charl. So yeah, boring can be beautiful. Boring can be sexy. So let's see. Hopefully 18 months down the line, we've made some good money. So yeah, Charl, thank you so much for being on the show again. We'll definitely have you in the future. And everyone that's listening and viewing this podcast, thank you so much for your support, and really consider liking and subscribing. It really goes a long way in helping us grow the channel. What's next? Next, I interview Hugo on Santova, his biggest holding. So today we had Charl's biggest holding, which is Caxton. Now Santova, which is a very popular stock. It's also one of Charl's biggest holdings, is Santova. And then Charl agreed to do Thungela next. And I know Thungela is a FinTwit favorite, so looking forward to that. Personally, I don't hold Thungela, but I know of a lot of people who actually do and made so much money in 2022 with that stock. So yeah, let's not spoil that. Let's keep that for next time. So thank you, everyone. Have a great week. Thank you very much, Charlie.
Keep up.